Good afternoon, and welcome to the BizTech Asian Midday Market Watch. I'm your host, Samantha Voon, and my co-host here, Jeffrey Halley. It's Thursday, the 9th of May, and our guest today is Tina Teng, an Independent Market Analyst based in Auckland, New Zealand. Tina, good afternoon. Thanks for being on the show.
Thanks for having me again.
Before we start, as usual, we'll have a look around Asia's stock markets today and get Tina's thoughts. So looking across Asia, it's a fairly mixed bag today. The Nikkei 225 is up just 0.18%, but the Shanghai Composite has rallied 0.93%. A great day in Hong Kong as well. The Hang Seng is 1.35% higher. But if we look down in Australia, the ASX 200 in Sydney is down 1.11%. And in South Korea, the Kospi has fallen by 1.12%. In Singapore, the STI is up just 0.05%, a quiet day there. While in Kuala Lumpur, the KLSE is down 0.27%.
Tina, what are your thoughts on today's moves in the regional stock market?
So first of all, we can see the divergent moves between Australian markets and Chinese markets. There's two factors. First of all, Chinese trade balance data came out much better than expected, especially its imports is much higher and rose much more than market estimates. That's just raised this optimism that the Chinese economy actually has been recovering very well this year. And following the recent rebound, very strong momentum in the Chinese stock markets, I think investors might be chasing profit. As for Australian markets, that's because weak earnings from the biggest bank, Commonwealth banks. So that's dragged down all the sentiment. So price down the Australian markets.
Mm-hmm. And we also see in Wall Street, right, extending gains for multiple sessions now. What's driving it, and what can our viewers expect from this, Tina?
Wall Street actually this week has been being strong, extended its gains. I think since last week, the Fed meeting, actually markets are seeing the possibility for the Fed to again cut interest sooner than previously projected. Just always, people are changing. It's also because the recent economic data from the US actually softened, and also from the Fed meeting, they slow down the pace for the balance sheet and lending. So there's a signal that probably the central banks around the globe are starting lower the expectations for higher for longer rates. So that's a macro view that potentially push up the stock markets at the moment.
Tina, let's turn to Forex markets. After the fireworks and the Japanese yen last week, we've seen a consistent weakening of the Japanese yen this week versus the US dollar. And I can see here on my charts, dollar yen is trading near its the high for the week at 155.55 at the moment. The weak yen does seem to have been putting some downward pressure on other Asian currencies as well, notably the Chinese yuan. Do you expect this weakness to continue? And if it does, what are the implications for the region?
I think, first of all, the Japanese yen fundamentally, because there's government bond yields difference between the US and the Japanese government bond actually are very wide. That's the fundamental factor that support weakened yuan and strong US dollar. And yes, weakened Japanese yuan put pressures on Asian currencies, especially on the Chinese yuan, because they're just losing competitiveness of export. I do expect the Japanese yuan will continue weakening against the US dollar at a stage. Last week is just weakened in sudden and touches the pivotal support level. US dollar Japanese yen. Now it's like a technical rebound, and also I think there's a speculations there that they want to weaken Japanese yen because US dollar now is still holding the strength.
Right. Okay. So let's look at central banks now. And this afternoon, I believe we have the Bank of England, its latest rate decision and policy announcement. It's held rates unchanged at 5.25% for 5 meetings in a row now. Are we expecting finally any changes from the Bank of England this time around? And what does this actually mean for investors?
Certainly, there's no expectations for the bank to change the interest rate at this stage. However, I think there are signs of global central banks are tending a little bit dovish than previous meetings. I think following the Fed meeting, they more smelled some sense from the markets that actually central bank would start cutting rates this year. If it's not in June, it'll be in September.
Mm-hmm. All right. Thank you for speaking to us, Tina.
Thank you, Sam. Thank you, Jeff.
All right. I'm Samantha Voon.
And I'm Jeffrey Halley.
And we've been speaking to Tina Teng, Independent Market Analyst on BizTech Asian Midday Market Watch. This video and podcast will be on our website, www.biztech.asia, our social media platforms, as well as our syndication partners' TV stations, radio stations, and website. Please like and subscribe to our various platforms. Thanks for tuning in.